I know that in my newsletter I promised that I would show the indicators of trading the euro because the Ichimoku cloud technique is the same analysis regardless of what you're trading, whether it's stocks, whether it's E-mini futures, whether it's forex, commodities. And so what I wanted to show here was the first break of the cloud back in here, and right about the beginning of May 2009. It's above the Tenkan line, it's above the Kijun line. Tenkan is turning line, short-term line. This is a more medium-term line, and then the cloud really is the support or the resistance. It's all about the cloud, and you're fine-tuning either above or below the cloud. So here above the Tenkan Kijun line, that's about 1.3350. If you're just trading the cloud, small little cloud test here, and continues and continues and continues all the way up to 1.51. Doesn't break the cloud until about 1.46. So that's a trade of about 1.33 to 1.46 over a period of approximately 8 months. Breaks the cloud. What you can actually do at this point is you can completely reverse the trade. 1.46 all the way down to where we are right now, 1.34, and it's just barely touching the cloud. It's still completely bearish as the cloud goes. However, if we were to actually make this a shorter time frame, which is important, because if you're trading forex and you're just trading the cloud, you're really only looking at making a few trades a year. Here we have the 60-minute on the cloud. You can see back here on the 5th of April, breaks the cloud, does a little cloud test here, 6th, 7th, 8th, 9th for about 4 or 5 days. It's clearly a negative trend. Breaks the cloud to the upside. This is a 60-minute chart, so you had about 5 hours to get out of this short, and then it absolutely takes off about 300 pips in less than 24 hours. So this is a 60-minute chart. I would also recommend doing a 120-minute chart. That's a 2-hour chart. Depending upon the currency pair, different sorts of time frames work best. You're basically seeing the same thing here on the 120-minute chart. I actually like the 60-minute chart better for this. But overall, remember on the daily cloud, it is still completely bearish on the daily cloud. So this is actually a snapback rally. So on something like this, I'm not looking for a huge objective. On something like this, I can only trade the Tenkan line if I want, this blue line here. And even though it has a massive rally, it stays above this blue line. You can stay in. You may be wondering, my God, I'm already up 100, 200 pips. What happens? It breaks the Tenkan line here, 1.36. You don't need to go short at this point. You can just get out, see how it plays out until you see a better entry point. When something goes this crazy, you don't necessarily have to completely reverse it. But if you did, you're already up a few pips. I also wanted to look at gold. We got in gold a few days ago for the stocks and options service, and on the options we're up, I think it was 35% last time I checked, and this is using the cloud technique for gold. Now several months ago, I think it was back in January or even before that, I said I wasn't really interested in gold until it reached about 1,100 an ounce. This is using GLD, so it's almost the same, just without the last digit. 1,100 an ounce was about here, 110 on GLD. We actually got in a bit earlier at about 105 here. From this move up to about here the second day, well, this was the highest. We got out the next day pretty much at the open, and that was about a triple on the call options. The reason I got out was because it was just absolutely ridiculous at this point. Also, having looked back in time, when you get into a trade, what you always want to do is ask yourself, did I get in the absolute optimum entry point? If you got in a little bit late like we did, you have to base your trade based on where you should have got in, even though you're catching just the last part of the trade, which is what we did here in GLD. Using the analysis I've used for a long time, which has worked consistently on a lot of these things, I'm now also fine-tuning with the Ichimoku cloud, because the Ichimoku cloud can get you into new trends a lot sooner than a lot of other techniques. And that was what I realized was incredibly important in our trading, is when the trend changes, you have to be on top of it immediately. recently we got back into gold over here. A little bit difficult to see here on the cloud, but you can see that it actually broke the cloud, broke the Tenkan, broke the Kijun. We got into the call options right about here, but it's a lot easier to see on the 30-minute chart, which is what I'm going to show right now. Move to the 30-minute chart. Here, breaks the cloud on the 30-minute chart here. At this point, we got into the calls right about here. No, actually it was a little bit higher here. And we just continued to ride the Tenkan line. Looking at things on a much smaller time frame, if I was to go back to the 5-minute chart, if you're looking at this intraday, there are times you might think, gosh, you know, it's just not working out. But even here on the 5-minute chart, you can see that it actually doesn't even break the cloud on the 5-minute. It tests it. Actually, it did break it one time here into the cloud. Never, man, broke it a tiny bit here. But I was trading the 30-minute chart. You can't really trade a 5-minute chart if you're looking at swing trading. You need to trade a 15 minimum, 30, 60-minute chart. On the 30-minute chart, looks great here. If I go to the 60-minute chart, still looks great on the 60-minute chart. And we're going to hold. We're going to continue to hold this gold trade. Looking back here on the 30-minute chart, I'm going to look to continue to hold this gold trade on the Tenkan line and the Kijun line. That's basically what we're looking for. Gold is now in a positive trend from the daily chart, and it's above both lines. This means everything is bullish. All the signals are go. We have to keep in mind, however, there was the previous high, and I'm probably going to get out at a bit of a lower top, so I'm not going to be having a massive objective here of something like 130 on GLD. It's probably not going to be too much longer. It's probably only going to be a few more days. So again, this is the 30-minute chart on gold, and you're probably wondering what is all this mess back here? How can I trade this mess? It doesn't really look like there's a lot, you know, of consistencies back here with the technique. The reason I ignored all of this back here and we got in around here, it was actually 1 to 2 days late on the gold trade, but everything still looked to go, was if you go back here to the daily chart, you can see that all that mess you saw was all here in the cloud. I didn't want to get bullish until gold broke this cloud, which was here, broke the Tenkan and Kijun. We're looking at about 110. I go back to the 30-minute chart. Around 110 is right about here. If you were absolutely totally fine-tuning it, you might have got in a little bit earlier because a break of the cloud looked and appeared to be imminent. You also have to look at a few other indicators like momentum, which I also do. So this was a pretty in-depth analysis of the gold trade, and we continue to hold gold for now.